Welcome to Market Brief After Hours. Today, we are looking at a market that is pushing higher as investors shift their focus away from geopolitical headlines and digest some softer than expected inflation data alongside a rather sobering updated global outlook from the International Monetary Fund. It is a fascinating tug of war between optimistic short-term data and broader structural risks. To break it all down, let's dive right in. The U.S. markets had quite the day. What were the key takeaways from Wall Street?
It was definitely a risk-on session, largely driven by that producer price data easing immediate inflation fears. Let's look at the exact numbers. The Dow Jones Industrial Average extended its recent rally, climbing roughly 318 points, which is a 0.66% gain, to close at 48,536. The S&P 500 also had a stellar day, gaining 1.18% to finish at 6,967. That actually puts the index less than 1% below its 52-week high, reflecting some very strong underlying momentum.
And the technology sector was leading the charge again, correct?
Absolutely. The Nasdaq composite really surged, advancing 1.96% to close at 23,639. Technology stocks were the primary engine there, heavily supported by ongoing demand for AI-related companies. We saw solid advances across the board in that space.
You mentioned the producer price data as a catalyst. How did those numbers actually shake out?
The producer price index increased 0.5% in March, which was significantly below the 1.1% consensus forecast. Core PPI rose just 0.1%. Now, despite that softer monthly reading, the annual PPI did accelerate to 4.0%, which indicates that underlying inflation pressures are still there. However, the data suggests inflation isn't re-accelerating sharply, which took a lot of pressure off the Federal Reserve. We saw this reflected in the bond market, where the 10-year U.S. Treasury yield declined more than 4 basis points to 4.252%.
That easing pressure makes sense. We also saw some massive movement in the energy markets today, which ties directly into the inflation narrative.
Yes, oil prices tumbled sharply. WTI crude fell 7.87% to $91.28, and Brent crude declined 4.6% to $94.79. This drop came as expectations of renewed negotiations in the Middle East reduced immediate supply fears. Furthermore, the International Energy Agency warned that these elevated energy prices are already dampening demand, forecasting a contraction of 1.5 million barrels per day in the second quarter.
Which brings us perfectly to the broader macroeconomic picture. The IMF released its updated outlook today, and it wasn't entirely rosy.
Not at all. The IMF trimmed its 2026 global growth outlook down to 3.1%, a reduction of 0.2 percentage points. They specifically cited economic disruptions from the Middle East conflict and warned that the current energy shock is comparable in magnitude to the 1974 crisis. Looking at the specifics, they project the U.S. economy will grow by 2.3% in 2026, while China slows to 4.4%.
And the outlook for Europe is even more stagnant, right?
Exactly. The euro area is projected to grow just 1.1%, and the UK stands out with one of the weakest outlooks among advanced economies, projecting a mere 0.8% growth rate as they grapple with rising energy costs.
Speaking of Europe, how did the European markets react today? We are seeing inflation pressures intensify over there, which contrasts a bit with the U.S. narrative.
That is the nuance of today's session. Despite those inflation pressures, European equities closed broadly higher. The Stoxx 600 was up nearly 1%. Looking at specific countries, Germany's DAX rose 1.27% to 24,044, France's CAC 40 gained 1.12% to 8,328, and Italy's FTSE MIB climbed 1.36% to 48,176. The UK's FTSE 100 had a more modest gain, adding 0.17% to 10,601.
But the inflation numbers in those countries are still running hot.
Very hot. Spain saw its CPI revised up to 3.4%, driven by energy and transport. Germany's wholesale prices surged 4.1% year-over-year. And in Sweden, inflation rose to 0.6% on the back of jumping fuel prices. So European markets advanced today, but they are definitely fighting a stronger inflationary headwind than the U.S.
Did we see a similar dynamic play out in the Asian markets?
We did. Markets across Asia were predominantly higher as investors weighed the possibility of a U.S.-Iran ceasefire. Japan's Nikkei 225 surged 2.43%, and South Korea's KOSPI rallied 2.74%.
In mainland China, the CSI 300 rose 1.19%, and that was even after customs data revealed export growth slowed to just 2.5% in March, massively missing the 8.6% forecast due to rising energy costs. Down in Australia, the ASX 200 managed a 0.5% gain, though domestic consumer sentiment plummeted to a 2.5-year low, triggered by surging fuel prices and a recent interest rate hike.
It is a complex picture, balancing those immediate stock gains against broader macroeconomic warnings and global supply shocks. We are going to take a quick break, but when we come back, we will dive into the foreign exchange markets, specifically looking at those key moving averages, and we'll break down today's biggest individual market movers. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the major global indices and the macroeconomic backdrop. Now let's shift gears to the Forex market and commodities. There was some significant movement today, especially when we look at the technicals. Let's start with the euro against the dollar.
The Euro-USD pair had a great session, extending its rally above some key resistance levels. It closed at 1.1793, up 0.29%, after trading in a range between 1.1755 and 1.1811. What's really compelling here is the moving average structure. The price is sitting firmly above the 50-day simple moving average at 1.1673, the 100-day SMA at 1.1694, and the 200-day SMA, which is actually converging right at that 1.1673 level as well.
So a very strong bullish setup.
Absolutely. Breaking above 1.1750 cleared a major resistance zone that had been capping gains since early March. The momentum is highly constructive right now. Immediate resistance is up at 1.1811, but there's real potential to push toward the 1.1900 level.
It sounds like a strong bullish structure. What about the British pound?
A very similar story. GBP USD strengthened, closing at 1.3585, up 0.44%. It confirmed a bullish breakout and is holding well above its averages too. The 50-day SMA is at 1.3429, the 100-day is at 1.3436, and the 200-day is at 1.3414. Breaking above 1.3500 represents a decisive move out of its prior consolidation range, with upside momentum firmly intact.
And looking at the Japanese yen, there was a mild pullback today, but the broader trend seems to hold.
That is right. USD JPY closed at 158.85, down 0.36%. But despite that slight decline, the pair is still elevated and trading above its moving averages. The 50-day SMA is at 157.46, the 100-day at 156.86, and the 200-day is way down at 153.24. It looks like it is consolidating just below the 159.00 level, and dips are still attracting buyers.
Let's round out the Forex discussion with the Aussie dollar.
AUD-USD extended its breakout, closing at 0.7127, up 0.47%. Again, we see the price well above the moving averages, the 50-day at 0.7031, the 100-day at 0.6968, and the 200-day at 0.6701. Breaking above 0.750 really re-established that upward momentum across all timeframes.
It is fascinating how those moving averages paint such a clear picture of the current trends. Did we see similar bullish momentum in the precious metals market?
We absolutely did. Gold rebounded sharply, closing at $4,845, up 2.12%. While it remains below its 50-day SMA of $4,896, it holds comfortably above the 100-day at $4,677 and the 200-day at $4,168. Silver had an even more powerful session, surging 5.28% to close at $79.54. Silver has moved decisively above its 50-day SMA at $79.10 and remains well above the 100-day at $76.39 and the 200-day at $59.62.
Now, let's talk about individual stocks. There were some massive swings today. Who were the big market movers? The biggest standout was Travere Therapeutics. Their shares absolutely skyrocketed, surging 36%. 36% in one session is huge. What was the catalyst? They received US FDA approval for their drug Filspari, which treats a specific kidney disease in patients aged 8 and older. That kind of regulatory green light always brings massive volume. Another huge winner was Bloom Energy, which climbed 23%. They announced an expanded collaboration with Oracle to develop AI and cloud computing infrastructure.
AI continues to be the magic word for investors right now.
Without a doubt. And speaking of Oracle, their stock continued its ascent as well, adding 4.7%. It is extending a rally from the previous session as investors keep favoring large-cap software providers.
But it wasn't all green screens today. We saw some significant drops, particularly in the automotive and banking sectors.
Yes, CarMax took a heavy hit, plunging 15%. Even though they had an earnings beat, they paused their share buyback program and reported year-over-year declines in key metrics, which really spooked investors. And in the financial sector, Wells Fargo slid 5%. Their first quarter net interest income came in at $12.10 billion, which missed the consensus estimate of $12.27 billion.
We also cannot ignore the crypto space. Bitcoin showed some strength today, and that usually ripples through the related equities.
It certainly did. Bitcoin climbed more than 1% to hit a one-month high. That lifted crypto-linked stocks across the board. Coinbase Global and Galaxy Digital both jumped by more than 5%. Riot Platforms rose over 4%, and we saw additional gains from Strategy and Mara Holdings.
So if we pull all of this together, we have equity markets pushing higher on easing inflation at the producer level, but the underlying macro picture, especially looking at that IMF data and European inflation, is getting increasingly uneven.
That is the perfect summary. The divergence between softer U.S. inflation and weakening global growth creates a fragile foundation. Gains might persist in the short term, but the market remains highly sensitive to any shifts in economic momentum or global demand conditions.
A nuanced environment indeed, and one we will continue to monitor closely. Thank you for breaking down the data, the technicals, and the broader macro environment so clearly. And to our listeners, thank you for tuning in. If you find this useful, please follow Market Brief After Hours.